Is it time to buy or sell NIO stock? In this video, we will take a comprehensive look at NIO. Our initial report was published on our website on Monday, the 21st of July, 2025. And now, we are here to deliver an even more detailed analysis. Remember to subscribe, hit the like button, and turn on the notification bell to stay informed about our latest analysis. You don't want to miss any important updates that could affect your investments. Enhance your trading decisions by exploring our newly launched AI stock analysis tool powered by GPT-4 at StockInvest.us. Tap into the power of AI and receive free price predictions and in-depth analysis for any one among 45,000 companies around the globe today. Please keep in mind that this video is for informational purposes only and should not be regarded as financial advice. Since July 10th of 2025, our system has ranked NIO as a hold or accumulate, assigning it a score of 0. Now, let's examine the stock's performance during this time frame. Throughout this period, the stock has exceeded our expectations, realizing a gain of 22.49% since we first recommended purchasing NIO 8 days ago. This equates to an average return of 2.81% per day since it was categorized as hold or accumulate. A score of 0 indicates that our system predicts significant volatility and risk for the upcoming trading day. Considering the latest developments, we're unable to ascertain the stock's next move as it could take either direction. The stock has broken the wide and falling short-term trend upwards. Initially, a slower rate of decline is indicated, which may signal an early shift in the trend. On the reaction, there will be support at the roof of the current trend, broken at $4.04, a level that may present a second opportunity for gains. According to fan theory, $4.76 will be the next potential peak level, creating a resistance that may not be surpassed on the first attempt. The current 3-month trend suggests a possible decline of 6.76% over the next 3 months, with a potential return ranging between negative 31.64% and negative 16.74%. Looking at the longer term, our 12-month analysis indicates a projected change of negative 18.63%. Based on our calculations, the stock's performance could fluctuate between negative 50.54% and positive 9.79% over the next year. In current terms, this would place the future price somewhere between $2.24 and $4.96. Our latest daily update for NIO includes the headline, NIO stock downgraded from buy candidate to hold accumulate after the Monday trading session. The NIO stock price gained approximately 3% on the last trading day, rising from $4.39 to $4.52. During that day, the stock fluctuated nearly 5% with a low of $4.46 and a high of $4.67. The price has increased in 7 of the last 10 days and is up by over 32% over the past 2 weeks. Volume fell by 21 million shares on the last day, with a total of 57 million shares traded, amounting to approximately $258 million. It is important to consider that declining volume alongside rising prices can indicate divergence, which may be an early warning of potential changes in the coming days. Over the past 52 weeks, the highest stock price was $7.71, while the lowest was $3.02. Currently, the price is over 41%, or $3.19, below the 52-week high, and 93%, or $62.47, below the all-time high reached on January 11, 2021, when the price soared to $66.99. NIO is currently capturing significant investor attention as it continues to ramp up sales revenue and expand vehicle profit margins. This positive trajectory can enhance short-term investor sentiment and potentially boost NIO's stock price. However, despite this growth, recent reports indicate that NIO is grappling with underlying financial challenges and unrealistic production guidance. The company's management has set ambitious delivery targets for 2025 that many analysts believe exceed current capabilities. Compounding these concerns, NIO's stock has been in a volatile market, partly influenced by tariff-driven uncertainties affecting Chinese electric vehicle manufacturers. Investors must also consider NIO's strategy of launching lower-priced brands and its push into battery swapping infrastructure, which could provide a competitive edge but requires substantial investment and could strain cash flows. In the long term, while the expansion of innovative technology and affordable models might attract a broader customer base, the persistent issues of cash burn and low institutional confidence pose risks. As the market reacts to both the promising revenue increases and the existing financial hurdles, NIO's stock price will likely reflect this complex balance of optimism and caution in the coming months. Analyst ratings. On Monday, the 14th of July, 2025, it was reported that Morgan Stanley assigned NIO a buy rating along with a hold action. On Tuesday, the 17th of June, 2025, Goldman Sachs provided NIO with a neutral rating and an upgrade action. On Monday, the 28th of April, 2025, Citigroup rated NIO as a buy with a hold action. On Thursday, the 21st of November, 2024, Bank of America Securities assigned a neutral rating to NIO with a hold action. On Monday, the 28th of October, 2024, Wells Fargo provided NIO with an equal weight rating and an upgrade action. Analysts have assigned a general sell rating to NIO stock. They classify the price-earnings ratio as a strong sell and the price-to-book value also as strong sell. Regarding return on investment, the analysts provide the stock with a strong sell rating. The following signals have been identified for NIO. The NIO stock presents buy signals from both short and long-term moving averages, indicating a positive outlook for the stock. Additionally, there is a general buy signal due to the relationship between these two indicators, with the short-term average positioned above the long-term average. During downward corrections, support can be expected at levels of $4.25 and $3.68. A drop below any of these thresholds would trigger sell signals. A buy signal emerged from a pivot bottom point on Friday, June 20th, 2025, and since then, the stock has risen by 32.55%. Further increases are anticipated until a new top pivot is established. Moreover, there is a buy signal from the 3-month moving average convergence divergence, or MACD. On the last trading day, volume decreased despite an increase in prices, creating a divergence between volume and price, which may serve as an early warning. Therefore, the stock should be monitored closely. Here are some additional signals that may pique your interest. Moving average convergence divergence, buy signal. Pivots, buy signal from 21 days ago. Bollinger, buy signal from 6 days ago. Short-term moving average, sell signal from 12 days ago. Long-term moving average, buy signal from 9 days ago. The relationship between the short and long moving averages indicates a buy signal from 7 days ago. If we examine the 12-month chart, we observe short moving average, buy signal from 9 days ago. Long-term moving average, buy signal from 7 days ago. The relationship between the short and long moving averages shows a buy signal from 75 days ago. Remember to visit our page at StockInvest.us if you wish to discover more signals. Support, risk, and stop loss for NIO. On the downside, the stock finds support just below today's level from accumulated volume at $4.17 and $3.90. There is a natural risk involved when a stock is testing a support level, as breaking this level may lead to a decline to the next support point. In this case, NIO finds support just below today's level at $4.17. If this level is broken, the next support based on accumulated volume will be at $3.90 and $3.69. This stock may experience significant movement throughout the day, which indicates high volatility. With a large prediction interval from the Bollinger Band, this stock is considered to be high risk. Over the last day, the stock fluctuated 210 cents between its high and low, representing a change of 4.71%. For the past week, the stock has exhibited an average daily volatility of 6.01%. Before we dive into the possible good trading levels for NIO, let's quickly cover some essential fundamental data. First, the price-to-earnings ratio, or PE ratio. This crucial ratio measures a company's current share price relative to its per-share earnings. A negative PE ratio indicates that the company has negative earnings or is losing money. Even established companies can experience downturns, often due to factors beyond their control. However, consistently negative PE ratios may signal insufficient profit and potential bankruptcy risks. In other news, the next earnings report for the second quarter of the year 2025 is expected on the 4th of September, 2025. Analysts' consensus estimates are at negative 0.3%. Keep an eye on these numbers, as they can greatly impact stock prices. Now let's discuss some potential day trading levels for NIO. There's no significant resistance from accumulated volume above, which suggests that the stock could move upwards swiftly under the right conditions. In this scenario, you might consider entering a position and using volume to determine the optimal time to exit. On the downside, NIO encounters its first support level at $4.17. If this support level holds firm, it could serve as an excellent entry point, anticipating a potential rebound. The combined average rating for NIO from various analyst sources is to sell. The most recent insider trade for this stock occurred over 3 months ago. The last transaction took place on the 24th of February, 2016, when Citigroup Inc. executed an insider sale of 850 shares of variable rate demand preferred shares. Our recommended stop loss is set at $4.30, which reflects a decrease of 4.84%. This stock experiences significant daily fluctuations, indicating a high level of risk. The 14-day relative strength index stands at 83, which substantially heightens this risk. Additionally, there is a buy signal generated from a pivot bottom identified 20 days ago. Is NIO stock a good buy? NIO presents several positive indicators. However, we do not find these sufficient to recommend it as a buy at this time. Currently, it is best viewed as a hold candidate, which means maintaining or gradually accumulating shares while we await further developments. Due to minor weaknesses observed in the technical analysis, we have revised our evaluation of this stock from a buy recommendation to a hold suggestion since our last assessment. After examining the volatility and movements from the most recent trading day, our systems indicate that the current price is undervalued. For trading on Tuesday, the 22nd of July, we anticipate that NIO will open higher by 3 cents, starting at $4.55. We remind you that trading carries a significant risk of financial loss, and it is advisable to consult a financial advisor before making any purchases or sales of securities. You should not base your investment decisions solely on the information provided by StockInvest.us. By utilizing this information, you acknowledge and accept responsibility for your own investment choices. This is our current view of the stock. Do you agree or disagree? We invite you to share your thoughts in the comments below. What is your target for the stock? Remember to like and subscribe. We wish you successful trading and hope you have a beautiful day. With warm regards from all of us here at Stock Invest.